These are the top 3 reasons, in my mind, why gold and silver are going higher in here, and it would be appropriate to have gold and silver as an allocation in a portfolio. And this is the last week I'm going to do it. This is it. It's now or never in these assets. Because what we won't do is buy them as they're skyrocketing. I'm going to let other people mark up my portfolio. So what happened this week? First of all, I'd say to you, the top 3 reasons to own gold and silver and the mining companies is that the argument that gold is a barbarous relic is over. Remember that argument? And this is not, I'm not going to take time out today to chuckle at the silliness of the crypto community who pretended that gold was a barbarous relic and nobody needed it anymore and everyone could just hop into crypto. I'm not going to do that. Okay? I want to, but the ARMR Report is about cutting through the noise and just sharing actionable information. I shared actionable information about Bitcoin when it was 50 and 60,000. And I told you it was going to go down and go down a lot. Right? I said, stop watching CNBC and listening to Tom Lee tell you it's going to go to 100,000. Or Kathy Wood, it's going to go to 1 million. Right? These are snake oil salesmen. It's going lower. All right, it went lower. Put that aside. All we want to talk about today is how to make money going forward. What's the information that's actionable? Get rid of the noise. Okay, so here it is. As of the start of this year, 2023, and this has been going on, I don't know, for at least 5 years, I think what we might do is invite the Silver Fox onto this live stream next weekend so we can go over this in more detail, precious metals, because nobody knows precious metals more than the Silver Fox. You guys know who I'm talking about. We're going to unmask the myth, the legend, the Silver Fox, who is an ARMR insider and someone near and dear to my heart. And I'll share if I think he'll come on and join us next week. And we'll all be able to kind of dive into which stocks are his favorite, because he's been doing research on this group, for a long, long time. Okay. So we'll go over some of that. We'll go into more detail. But today, just the top 3 reasons of why this is happening. Next week, we'll go into some more detail with the Silver Fox on this show. All right. But at the end of 2022 and the start of 2023, gold is now considered a tier 1 asset that banks can hold on their balance sheet towards their capital requirements. We say that again. Gold is a tier 1 asset now, and this has been happening over the last, 5 years, but finally in place. The line of demarcation was the end of last year, start of this year. Gold on balance sheets at banks, tier 1 asset used towards their capital requirements, much like other tier 1 assets, which could be the U.S. treasuries, right? So there is no debate that it's a barbarous relic. It's a real asset that banks can hold on balance sheets. Okay? If you're paying attention to what central banks have been doing the last couple of years, particularly China, which we see just in the last couple months, has been dramatically increasing the gold on their balance sheet. The barbarous relic has come back to life. It's a real asset. It's an important asset. And let me tell you something. You will never see in its current form any cryptocurrency be added as a tier 1 asset, right? So that's over. It's not a barbarous relic. It's a real asset that has value. And as it gets marked up in price, it helps balance what is a world awash in debt. That's the first reason. We're talking fundamentals. Why fundamentally are we starting to see the asset price rally? Now, look, we all know this has been coming. It's been broadcast for a couple of years. Okay. And then it got delayed. It was supposed to happen in 2022 and then got delayed to 2000. Okay, now it's here. Okay. Doesn't mean the asset can't go down next week. So asset price movement you put over here and fundamentals are over here. Fundamentals are great, but unless the price movement is proving it out, doesn't make a difference. All right. So just keep that in mind. Don't get carried away with the fundamentals. Fundamentals we use as a secondary source to understand movement. So here's the second reason. Here's the second reason why this chart is accelerating higher. Okay. The first, gold's no longer a barbarous relic. This is Sprott physical gold. Here comes the second. Let's look at it on the O'Neill chart. I'll switch back in a minute, but there's the breakdown in the US dollar, UUP. That was a huge inside out reversal day on Friday. What's the weekly chart look like of the dollar? So here's the up. I'm going to go back to this chart real quick. I'm going to pull it up here. Whoops. Okay. Now, we talked about this last year. So particularly in November, when I was sharing with you, it's time to buy gold and silver. What I said to you was, look at the chart of the dollar. It's put in a double top. If you remember, central banks came out right then and said, we're going to cap the dollar. We're going to do whatever we can to cap it here. And there was a big debate. Everyone loves to talk about George Soros and breaking the pound and whatever back in the 19 whatevers. But at the end of the day, when all the central banks around the world capped the price of the dollar, they capped it. We talked about that. We said if the dollar goes down in value, gold and silver going up. It's a reciprocal relationship. Okay. So from here to here, the 200-day moving average, to me, that was okay. That's just central banks suppressing price. But let's be honest. The move in the dollar last year was insane. I'm going to go out on a limb and say never seen before. Certainly in decades, that type of advance in the US dollar against all other currencies. And what I think is happening now that the dollar is below the 200-day and got rejected last week, look how it went right back. This is the green lines of 200-day. So it went right back to the 200-day and got rejected, having a big down day. Okay. So if it comes to the 200, fails at the 200 and breaks down, I personally, and I'm going to go out on a limb here and say, and I'll make a prediction because I don't like predicting, but I'll make a prediction. I think this whole thing has to be unwound. I think the value of the dollar is somewhere down in here. Okay. And we got out of hand because of pandemics and, Eastern European wars and a lot of strange things happened in the last couple of years that led to a dramatic increase in the value of the dollar, right? And that has to be unwound. So number one, gold's no longer a barbarous relic. It's held on major bank balance sheets as a tier one asset, and central banks around the world have been loading up on it. So obviously, there's a lot of debt out there. Central banks, price of gold goes up. All of a sudden, the books get balanced, right? So that's a no-brainer. The barbarous relic argument's over. Number two, the dollar breakdown that we highlighted in November is gaining steam and breaking below the 200-day moving average. If that continues, this is the last time we can own gold and silver because we're not going to pay up for it. We're going to let other people pay up for it. They're going to mark up our portfolio. Okay. And so here's the third reason why this was the last week. It's now or never to own gold and silver. And that reason goes to what I believe is the most important reason, because all the fundamentals and all the talk about the dollar, I don't have any control over any of that. We don't have any control over the fundamentals playing out, whatever, right? There's fundamentals, and then institutions have to believe those fundamentals and start buying the asset. And so all we care about, what's the actionable information that makes us money? It's understanding when the institutions begin putting money to work. That's it. The rest is noise. It's wonderful noise. We can talk about it, but it doesn't make us money. What makes us money is actionable, algorithmic information that says, yep, institutions are plowing cash into this asset. And so we use ARMR algorithms, and we share them on the desk, on the live trading desk all day. So I'm going to show you the two locations that we look for to buy any asset. There's two locations. And once the asset gets past that second location, we're done adding. Our buying's been done, and now we let everyone else mark up our asset. Okay. So what happened last week? Let's just walk it through real quick. Oh, but before I do this, let me just share this one thought with you, just so we understand what technical analysis really is. We're going to look at that pretty chart with a bunch of lines on it in a minute. That's GDX. But what is technical analysis? Let's remember this. It's not a crystal ball. It's not some type of magic. We're simply looking at the battle between buyer and seller. That's it. There's a war going on every day in the stock market. There's buyers who have ammunition and sellers who have ammunition. Charting, technical analysis, algorithms, all that's doing is trying to gauge where the line in the sand is. And when one team overruns the other, you get price movement. That's what technical analysis. Don't make it more confusing than it is. That's it. The whole point of technical analysis is to see where is that trench that they're fighting over and what team is going to overrun the other. So when the buyers overrun the sellers panic and they run to the next ammunition depot, whatever price that is. It's at a higher level. And then they start bombing away again. And there's a battle that starts again. That's called consolidation. That's all we're talking about when we talk technical analysis. I think people get confused. They think it's some type of, magic. It's not magic. It's just a graphic representation of the battle of wills between buyers and sellers that happens every day on the stock market. Okay. So we use all kinds of tools to figure out when is that battle moving in the direction of buyers versus sellers. So what you see here are two different Fibonacci fans. I like to use the Fibonacci fan. You can find it on trade stations, what I use. You can find it anywhere. I'm a big fan of Fibonacci. Go ahead and look it up. Google Fibonacci when we're done with this conference call or this live stream, so you understand what it is. You'll find it in nature. It's unbelievably valuable in day trading and investing, longer term charts. Humans behave in a predictable way, and Fibonacci is a wonderful way to get a goalpost of predicting what they're going to do. Okay, so that's all this is. So the theory behind Fibonacci fan is you draw three separate downtrends starting from the top. You draw three separate downtrends, all with Fibonacci distances between them. And when the third trend is broken, a new trend has begun. That's the theory. So this is the longer term trend on GDX. This is why I say this is the last week to own it. Okay. The first place to buy GDX is when that first downtrend is broken right here. And of course, we were doing that. That was early November, and we talked to you about it. Okay. But the second and final place to buy gold stocks is when it breaks that third downtrend line, which just happened this week. So here's a more aggressive trend. You can see how it works. Look at the more aggressive selling that went on. I'll zoom in a little bit so you can see this, right? So you can see this is the more aggressive Fibonacci fan. Boom, 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 right? And when it broke this third downtrend line here, that told you a change in trend on GDX had begun. And it literally called the bottom. And we called the bottom for you in early November, right? So this is the final breakout. And on our trading desk during the week, we had this box was white. And I was saying to ARMR insiders, when it turns green, we have to be long GDX. That's the last time we're going to be buying metal stocks. Right? So it turned green right here on this. When it popped out of this box, that's when it turned green. That was Wednesday. Okay. We bought some Wednesday. I pretty much doubled positions on Thursday's weakness. And then it skyrocketed Friday into the close, which is just beautiful. So that we have this, and we'll just look at this real quick weekly chart pattern. That's just a huge week.